With gold and silver both looking like they're trying to break out, I wanted to chat with Eric about what he thinks are the attributes that you should look for when picking your gold and silver mining stock. Because clearly, some of these names just don't perform when you think that they should do, given these moves that we get in the underlying commodity. Eric, welcome. We've seen gold break out. We've got silver starting to break out. When these things move, it should be an absolute slam dunk for the gold and silver mining stocks. But there always seems to be this incredible dispersion in the sector. So what do you look for? What are the key attributes that you care about when you're picking your gold and silver mining stocks?
There's this group that's the development stage companies, meaning they've already found, you know, 10, 20, 50, 80 ounces of gold that are there, that are in like a feasibility study stage. They just need final permitting, bankable feasibility, and then they build a mine. There's no exploration risk. Those have started to move better than the producers, and they just started. And my expectation is that pocket you want to pay attention to, because it's like, if as long as gold is still above 3,000, many of those are priced like gold is 1,500. And so there could be some real catch up played there. I'm one that rarely goes outside into risky jurisdictions, because you don't need to, because the really good gold projects, silver projects, and many commodity projects that are in North America or in Australia or in some of these friendly areas, they're still trading for nothing. Like, you can buy ounces in the ground for $5 an ounce or less in some cases. And they go into different categories, right? It's, 43101 is the third party that has to validate that you say what you have. And then you can put them, depending on how much work you put in to proving that up, you could be in a category called inferred, which is the lowest level, measured, and indicated. Measured and indicated M&I are considered the two most solid. So there are many of these junior companies that have measured and indicated ounces in the ground at good grades. Some of them where they could be open pit projects that won't cost billions to build a mine, and they could just shovel that stuff out. We need capital flows to come down. Think of it like Bitcoin versus altcoin season. When does altcoin season kick in? When Bitcoin becomes close to 70% of the entire market and outperforms for, a year and a half, 2 years, and altcoins don't go anywhere, or ETH doesn't keep up, then what happens? People say, I've got such big gains in this Bitcoin. Why don't I take some more speculation and look down the rung? I think the same thing is happening with juniors, like literally as we speak. But the last thing you want to do to like do homework and go shopping and start putting positions on is wait until that starts.
So, it sounds like you're doing some screening there. What are sort of things when you're looking through this whole universe? What are you screening for? Is it that sort of ounces in the ground, it's proven out reserve, or is it things like a bit of that, but also management? Because some companies have this stuff and they have nutters for management, or destroyers for management, which is what a lot of people worry about in the junior mining sector. If you had, let's say, you're saying to someone, okay, when I screen for these stocks, when you go and let's say you're wading through these small stocks, let's just pick just three things that you really look for.
Ideally, you want to already have a resource, meaning previous companies and that company has done enough drilling to find a discovery of a deposit of an ore body that you may still not know yet if it's going to be an economic mine, but at least they're moving in that direction. They've moved through the stages of where you can at least say via 43101, we know we've got 8 million ounces of silver, okay, at this grade. And there's probably a shitload more, but we've got to do more drilling. So I look for that. I look for that. I look for jurisdiction is a big thing for me. Papua New Guinea doesn't interest me, man. I actually like my left arm, okay? I don't want to get it slashed off. I mean, actually, New Guinea looks like it's making a comeback, so I'm not trying to pick on them. But there have literally been, sort of like cowboy mining people that have gone to places like Papua New Guinea because they're rich in resources like gold. Like, you don't have to do that. The other problem is the economic geopolitical situation. Do you really want to go to a place Chile made some very bad mistakes with their policy like a year and a half ago, and it caused a lot of people to leave Chile. I'm not going to put any money in Venezuela. That's for darn sure, right? Even though they've got certain things that are there that are really, really attractive. So I look at where it is. I look at seeing how much work has been done, or if it's what we call a greenfield project where there's really been nothing done, but you have somebody who has found multiple big gold mines and is saying, this looks exactly like that. I may take a flyer where we put in 1 million, 2 million bucks, and then you do some test holes to see if you hit something. But ideally, they've already got a resource. And even better than that, like that copper company I talked about, after you do the 43-101, then you have to go to a preliminary economic assessment. So that's taking what you found and start to put it together with math. What would this look like for a return? How much capital do we need up front? What's the OPEX, et cetera, et cetera? And you also have, I mean, I've been buying companies with pre-feasibility studies done. So that's like the next one. I mean, usually when you get to that stage, Roger, it's been like 15, 20, 30 years of work and 50, 100, 200 million dollars worth of drilling and work. So then if you've got a market cap at 15 million bucks with this big resource, even if the CEO is a schmuck, we have a huge problem in the mining sector with management. Unfortunately, it's probably worse than anything else, any other sector. And the reason I say that, and it pains me, okay, but think about it. You either have a geologist or a mining engineer that can find these things, that have that expertise, that just like if you're going to promote a UFC fight, are you going to ask an engineer to do it or Dana White? Okay. You have to have all the facets. If you're running a publicly traded company, you've got to raise capital, you have to raise awareness for your story, and you have to be able to go on the ground and drill and find resources. And the biggest thing for me, though, Roger, when I look for these things, I can tell you off the bat, which it could be a deal breaker or it could be very attractive where I buy it even if it doesn't have quite everything I want. Capital structure. Capital structure is huge because I see a lot of these companies, and actually the Australian mining industry, which is very big, they have a different mentality about this. So I don't invest in Australian exchange mining companies because for them, it's very normal to have a stock with like 1 billion shares outstanding trading at 3 cents. And they actually have like, so you say you're trading at a $30 million market cap with that much stock out, they probably have something, because they've been working on it so long. But I am an anti-dilution terrorist with these management companies. When we take a stake, what I tend to take the role of, like if I find a deal, I talk to the management, I start buying in the market, and I say, all right, you want to do a raise? My group will give you 1 million bucks, but it's a bad market. You got to give us a full warrant for 4 years. We're going to either get, I don't even care about a discount. Your stock's already cheap. I want the warrant. And then they'll talk to me and they'll say, well, yeah, we need about 2 or 3 million dollars. And I'm like, your market cap is 2.5 million bucks. You've been a public company since 1980. You're telling me that your company is worth, you're going to give away half of your company for $2 million right now. I'm like, what are you thinking? Are you thinking are you even a shareholder? I've got to keep a leash on that. That's one of the bigger problems that I run into in the sector. But if you can find some, there are some of them, they're prudent. So there's different things for different types. But I think the biggest problem is when you have a management team, just like in any sector, that doesn't own much stock, and then they over dilute the structure, you're not going to get good returns.
So I mean, you mentioned some there. It sounds like your red flags would be the dilution, the overly, I don't want to say bombastic, hyperbolic management with no track record of sane cash flow management. Any others that stand out there? Ones where you just go, okay, it looks good, price is going up, but I'm not touching it.
Well, listen, there's another element. So there's actually a thing that we call Vancouver lifestyle CEOs. So Vancouver is notorious for this, because a lot of money still goes through the Canadian exchanges to fund mining projects around the world. And I own a ton of Vancouver-based stuff. I know a lot of people in Vancouver. But what ended up becoming really common is that a CEO of a small junior will become a CEO of three different deals. So they're pulling 10 grand or 15 grand from each company. And they don't give a crap about how many times that the stock has to get rolled back or whatever. If they can keep raising enough to get their salary, they are Vancouver lifestyle CEOs. So one of the things that I bring up with these guys is, how many deals are you running or getting paid from? I can handle two. Two's okay. If I'm getting involved in your primary company and you have a smaller one that takes up 20% of your time, no problem. But when you get some of these guys, man, you'd be surprised. They're pulling money from five, six, seven entities. And those are the promoters. Those are the promoters. They're the other side. So you have the weaknesses with the creative analytical geologists and engineers that have to run a business that's not natural for them and raise money and tell your story to investors. I invest way more in them than I do with the guys that come in and they hype the shit out of a story.
So how much then? I mean, because people are looking into this, they want to have a good chance that when they pick, they don't want to just do the blunderbuss and hope for everything. They want to ideally pick something. It sounds like how much of this is still the Wild West versus how much of this sector is not just legitimate, but kind of provable, sensible, actually kind of old school, kind of wise old heads.
You've had a neglected industry. All right. People don't know about metals and mining. They don't give a shit about it. They don't understand it. But it is the most undervalued sector in the world. So then when you're talking about how do I evaluate a company, and is it, shysters versus like old guard? Most of it's still old guard, but these guys are very old, Roger, very old. I tend to bet on the guys that are very smart from a geology and mining engineering and metallurgical standpoint. So that's not my specialty. So if those guys know what they're doing and they can actually tell me why what they found and what they're drilling up can be a mine one day, that's really valuable. And then I can do my own assessment on valuation. And I do believe in free markets like this, eventually it'll get its correct, proper valuation, regardless of how much promote goes in from a CEO who's 72 and just doesn't really know how to do that. But because it'll get bought out by a bigger play. You'll get a nice exit, and then those guys can end up carrying that torch. But the gap that we have right now, this is part of our conundrum. You can take different risk on the risk spectrum, right? I don't come to the gold investment letter if you want blue chip gold stock picks. I don't care about them. I'm in the space to make multiples on my money and world class returns. To do that, I take a lot of risk. Buy 6 to 8 to 10 juniors. If you're going to get in them and you want to mitigate your risk, I'll have four of those that'll be down more than 50%, guaranteed. But it doesn't matter because all I need are the number one, two, three. One's a 4X, one's a 7X, one's a 30X. World class returns. So you have to look at it as a venture capital allocation model so that you don't just bet on one or two stories because you can get stopped. So that is my biggest suggestion is you treat it like a professional investor would in venture. So somebody who's just learning the space, I would go to a third party, come to goldinvestmentletter.com, join my premium list. You're going to get these picks regularly, and then we stick with them. We accumulate when they're down. We wait until we get to the point of either a catalyst that's going to hit or a better market for the space or the company is going to get acquired. And I keep people updated on that. And we have a lot of winners very, very often. But you're also guaranteed, if you want to go on the smaller end, you're guaranteed to have shit that goes down a lot. And I get people that buy one or two stocks and then one of them goes down 60%. And they're like, you're a scammer, you're full of shit. And I'm like, well, look, dude, if you would have bought four or five during the time you've been here, you'd be up 6 times your money, even with the two that are down 50, 60, 70%. But it's, you can't have, if you want huge returns, you have to take huge risks.
Obviously, you've got to do your homework when you're looking across these stocks, which is what Eric does. And he doesn't just use a sort of shotgun approach across everything. He does pick his names, but he also knows that many of these names are going to fail. But hopefully, he'll have sufficient ones that he's done his work on that will be those multiple X baggers that will offset those that maybe even go to zero.